So here we are as the index picks up momentum on the sell side. The last 2 days sell-off, Friday and today. Monday it was down 388 points, a little over that 2% mark. 17k is gone. The intraday low was 16,431 and close was around 16,635. So a decent 200 points kind of bounce from the intraday lows is not a bad news, but $1 million question is there still some selling left or not? Good evening, everyone. Today here we are on the 20th of December 2021, Monday evening, 12 minutes past 8 p.m. and we had the underlying downtrend which has just happened to pick up further momentum on the downside. Well, as you can see, this is the daily chart of the near month futures, and if you recall, we had this level drawn. I had drawn this blue rectangular zone primarily because of some degree of decent volumes that had happened in the past. Number one, it confluences with the anchored VWAP all the way from the lows over here, which goes back to the month of April this year. Number two, and number three, towards the end of this blue zone, which is around 16,170, that's 16,150, 16,200 zone, is where I have the 261.8 projection of this leg down. This first leg down extends towards this 16,150, 16,200 level. Volumes have picked up. These kind of high volume days, negative days, a little bit of feared selling generally leads to some extent short-term bottoming out. So have we bottomed out? We'll get some clarity on that. At least we need few days for the market to show some strength. But as of now, this blue zone is not a bad one. I expect this sell-off that we have now. When I say this sell-off, let's give it some number. From the all-time highs to the recent low, that is today's low, on a high to low basis, we are close to 12%, a little above 11.5%. That's a pretty healthy correction. And the last leg of this fall, or the recent leg of this fall, is around 7% in the last 6 days on a high to low basis. Now, number one, this blue zone over here is an ideal place for this 11.5% correction to face some amount of buying and slow down. Do we have signs of slowdown? Looking at the Heiken Nashi, looking at the indicators and the volumes, no. Yes, we have an impressive bounce back from the intraday lows, but that's not a sign of a slowdown. I would rather wait for the range to contract. I would rather wait for the Heiken Nashi candles to start to contract. And then we can say, okay, the index is showing signs of slowdown, selling slowdown. Also keep this in mind that you have a 200 points bounce back from intraday lows today, but there were not much stocks which participated. There's this Hindustan Unilever, but little can we expect from a stock which has been underperforming for a very long time. We'll come back to that when we take a look at top stocks. But what we can kind of confirm and conclude after today's close is the downtrend stays down and weak. The selling momentum has recently picked up. Range has been extending. In fact, today afternoon we would have seen a sell-off which was more than 500 points, which is quite phenomenal and rare. The index has entered a zone where it should find support and may end this 11.5% correction. So it has entered a fertile zone for slowdown and bounce back. But we do not have any immediate signs of slowdown or bounce back. So from the perspective of going long, it needs a little bit of more patience. No hurry, indicators have gone oversold, range has expanded, volumes have bloated up. So let's just give it a little bit of time just to see whether this is it or not. It can drag itself further down towards 16,200. That can also be a possibility. If we take a look at the smaller time frames, this is 35-minute time frame, which will give us some understanding about if we get a bounce back from here on, where can we expect some degree of resistances. The first immediate short-term resistance band would be close to this. Let me mark this with red so that there is no confusion later on when we discuss. So that's going to be the immediate, which is this psychological 17K mark. We have a breakaway gap here. We have erstwhile lows, a little bit of volume profile also. If I extend this chart and if I just shrink this a little bit, if you notice this volumes which happened towards the day's low, this zone is a decent sign. It's not a very impressive positive sign as of now, but it's decent enough for the index to stop selling and maybe find some foot and can give some bounce. So this is not a bad sign. I think from a strategical point of view, this is not the best place to go short. The markets have played out itself on the downside pretty well. Any kind of bounce back can be attempted to go short. Neither is the best time to go long unless you are buying some long-term investment plays. Like, I generally prefer a lot to buy Nifty Bs in these kind of sell-offs, wherein buying into index funds or index makes more sense to me than trying to capture or catch the bottom of any particular sector or stock. So if you have enjoyed the fall on the short side, it's a good time to start protecting your profits, trail down the stop loss, book your profits. If you're looking for a bottoming out, I think you need a little bit of more patience. Wait for the index to show those signs, and I'll share my commentary as we move ahead further this week. Bank Nifty stayed down, fell over 3%, and this index too, if you notice, have come in close to a blue zone where highs of April, lows of June, lows of July, they all kind of confluence. A little bit of volumes did pick up today afternoon down here. It's got some decent resistances which were earlier supports. These are the ones which will now act as resistances. So I'll just reverse the color so that it gives more sense for our future analysis. And this index is definitely still fairly weak. 75-minute time frame, smaller time frames for the Bank Nifty clearly reflects that it's been facing some real serious high momentum sell-off. Bounce back is very likely. Short-term resistances, as I have drawn before on the daily time frame, this is from the 75-minute time frame, this gap down. So this is more or less the story. If you click on through most of the sectoral indices, especially the ones which fell a lot, real estate fell, media, PSU banks, all of them shows high ranged sell-off bars in today's trade and over the last 2 to 3 days. Waiting for a little bit longer and waiting for the right opportunity, the right stock and sector is a better idea. Try not to catch the bottom, which is an interesting attempt for many. You feel like market's fallen so much, let's buy. Try not to catch the bottom because we don't know whether the index will bottom out here or 400 or 500 points further down. So wait for some confirmation. Top stocks, okay, let me quickly take a look. 50 points positive from the SGX Nifty, but the US markets have sold off significantly, over 1.5%. This is S&P 500 gap down and at the lowest point, and this is Dow Jones down more than 600 points as we record this video. Not turning out to be a pretty picture. It seems like equity finally gets a chance to correct after the one-way big time bull market uptrend that we have seen since the lows of March 2020. Not a bad correction, fairly healthy for the overall market. Amongst the top stocks, as I was telling you, Hindustan Unilever was the only stock which gained in today's trade, but what a day it chose to gain, because it's been underperforming for a very long time. Not a very good sign. Stocks like Maruti did bounce back. Sun Pharma was kind of flattish. TCS also managed some gain from the day's low, but none of these stocks, honestly, if you ask me, I've taken a look at all of them, doesn't give me the confidence that, okay, this looks like a good candidate for a short-term bounce back. These are all high quality names, and one can definitely buy stocks like ICICI Bank and Reliance for their long-term portfolio. And as I've been always, in the recent couple of weeks, I've been saying that either be an extremely short-term trader, don't carry anything overnight, intraday, whatever profits or loss you make, get done with it, or else be a very, very ultra long-term investor wherein a correction of 5, 10, 15% will not bother you. If you're in between, you better be good, or else you'll pay the price. I'll quickly wrap this up talking about Reliance Industries. If you remember, we had drawn this blue zone down here, and we welcome the stock at levels of close to that 2200, 2250, 2245. It will, I'm quite hopeful that it will slow down in this zone, or if it slips further down, who knows. But from this level onwards to another, let's say 5 to 8% is going to be the zone where most of these stocks should ideally bottom out for the short term, right? So I think a little bit of patience from all of us would be good enough for a confirmed approach if we look to buy into this falling market. All right, thank you for listening to me. Do share your thoughts about the market, your suggestions. Till then, take care of yourselves. It's been cold, so keep yourself warm and trade well, trade wise.